Blue Chip Bulletin. Financial market updates and insights.
Salesforce just dropped its latest earnings report. And on the surface, the numbers looked pretty fantastic. But the real story here? It isn't just about the last few months. It's about a massive, strategic pivot towards an AI-powered future. Okay, let's dive right in. So first up, the headline news. Salesforce posted a huge earnings beat. We're talking an adjusted earnings per share of $3.81. That absolutely smashed Wall Street's expectations of around $3.05, which just goes to show you the company's core profitability is incredibly strong. And yet, this is where things get really interesting. Despite that impressive number, the stock faced some serious pressure. So what gives? If the results were that good, what's got investors so spooked? Well, the answer really lies in this big shift from the company's past to its very ambitious future. To really understand where Salesforce is going, you have to look past its traditional business. We need to focus on its new AI-powered growth engine, because believe me, this is where the company is placing all its biggest bets.
And you know what? Those bets are already paying off in a big way. The company's key AI and data platforms, that's Agentforce for automating customer service and Data 360 for unifying customer data, they're now pulling in over $2.9 billion in annual recurring revenue. Seriously, this is not some side project. It's a multi-billion-dollar business all on its own.
And just look at the speed of that growth. We are talking about a more than 200% year-over-year explosion in revenue that's tied directly to AI. This isn't just simple growth, it's a total seismic shift in where the company's future momentum is really coming from. Just for a little context, let's look at the traditional business, the classic service and sales clouds. They're still the biggest pieces of the pie, for sure. They are the stable cash cow divisions, but their growth is kind of hovering in the high single digits, absolutely nothing like the triple-digit rocket ship we're seeing from the new AI products. Now, this shift isn't just about rolling out new products. It's a completely new philosophy for the company. CEO Marc Benioff is framing this whole moment as the dawn of a digital labor revolution, and he wants Salesforce to be the one leading the charge. And this quote from Benioff, it's not just some marketing fluff. It is a direct statement of intent. They see AI not just as another feature, but as the fundamental core of their future, powering what they're starting to call the agentic enterprise.
And the numbers behind this are just staggering. Get this, they've delivered 2.4 billion agentic work units, and you can think of those as individual automated tasks like answering a customer email or whipping up a sales report. They've processed 19 trillion data tokens, which is a 5-fold increase from last year. And here's a huge sign of adoption. They've already closed 29,000 deals for their new Agentforce product. But maybe the most impressive stat of all, when they use it on their own help site, the AI is resolving 84% of issues without any human help. That's incredible.
Okay, so this all sounds incredibly bullish, right? But this ambitious AI future is colliding head-on with some pretty harsh market realities. So what are the headwinds the company is actually facing? And this isn't just a Salesforce story. The entire software as a service, or SaaS sector, has been under a lot of pressure lately, and Salesforce is kind of caught in that broader storm. This slide really puts it in stark contrast. While the broader market, which we see here with the S&P 500, has climbed over 16%, Salesforce stock is down more than 27% year-to-date. That is a massive divergence that has investors feeling pretty on edge.
And there are some specific internal concerns to keep an eye on, too. Growth has slowed down in their marketing, commerce, and Tableau analytics segments. The rate at which customers are leaving, what they call attrition, is holding steady around 8%. And analysts are voicing some concern about the pace of growth, with the guidance for next year at just 7 to 8%, which is a slowdown from the 9% they just hit.
So, given all that stock pressure and the market headwinds, how is the company responding? Well, they're pulling two major levers to directly reward shareholders and really signal their confidence. First up, a massive $50 billion new share repurchase authorization. This is basically the company putting its money where its mouth is. They're saying they believe their own stock is the best investment they can make right now, especially at these lower prices.
And second, they're returning cash directly to investors. They just increased their quarterly dividend. And get this, they're now returning over 99% of their free cash flow back to shareholders. This is exactly the kind of move you see from a mature, confident tech giant. Okay, so we've got this incredible AI growth story on one hand, but we've also got these real market challenges and a falling stock price on the other. So, What's the final verdict from the financial analysts who cover this company every day? Well, a key part of the story is the valuation. The price-to-earnings ratio, which is just a common way to measure how expensive a stock is, has compressed dramatically. It's fallen from over 53 down to under 25. So here's the crucial takeaway. For every single dollar of profit the company makes, its stock price is now less than half of what it was just a year ago. This cheaper valuation, combined with that incredible AI growth story, leads us to the ultimate question for any investor watching this. Is this a big buying opportunity, or is there still more pain to come? And honestly, the analysts themselves are deeply divided. The most bullish out there see the stock more than doubling to $475 a share. But the most bearish? They see it going basically nowhere with a price target of $190. That huge range perfectly captures the uncertainty and the high-stakes debate that's swirling around the company right now. Which really leaves us with the final burning question. Is this big pivot to an AI-driven agentic enterprise the beginning of the next great growth story for Salesforce? Or are the macroeconomic headwinds and the competitive pressures in the software industry simply too strong to overcome right now? That is the multi-billion-dollar question at the very heart of Salesforce's future.